Hey everyone, this is Kirk here again at optionalpha.com, and today we're going to go over all of the trades that we made for Tuesday, September 16th. Pretty good day as far as being able to close out some trades and then make some adjustments. Had some pretty wild action after hours in some of the stocks that we're trading. So I'm going to cover that towards the end of this video, but I do want to go over all of the closing trades and then the one quick adjustment that we had to UAL. So as we get closer to options expiration, which is happening this week, just make sure that you're aware of what's in your portfolio. I mean, that's one of the things I tell a lot of traders as I'm getting, doing coaching with a lot of guys is as we kind of head towards this last week, I mean, now we're really kind of getting into the nitty gritty of, making sure that you either close out the positions that you have that are winners, losers, whatever the case is, or think about possibly rolling those positions to next month. And we've got video tutorials right inside Option Alpha. We talk about, what's a good roll, what's not a good roll. So definitely check out those video tutorials if you're kind of, on the fence between deciding on whether to roll or not. The first trade I want to go over today is EWW. This is a really good trade, and very happy about how this butterfly turned out. It was a very small investment butterfly, really kind of a little bit of a lottery ticket as far as that's concerned, because what we were basically doing with this butterfly, and it was an even butterfly, which we don't do too many of, where the strikes are evenly spaced apart. So in this case, we had all call strikes, but they were the 15, 16, and 17, so about $1 wide, basically pinning everything around this 16 strike here for EWI. And EWI over the course of the month has moved beyond that and down below that, but has really kind of honed in around this 16 price point, which is great because that's allowed our butterfly to kind of really mature in value and really almost double our value in our butterfly. So we almost doubled our value and doubled our investment in this butterfly, but made a great little return on it. We made 28 bucks per spread that we entered. We could have obviously done more of these, but I like to keep these trades small because they don't always pin right at the 65 or the 16 strike like they should. Sometimes they go well beyond that and you end up losing the money, but you can see that now implied volatility has gone up for EWI, so that's really helped this butterfly, right? That increase in implied volatility. And when we made the trade, we wanted it to go up to 16. It went all the way past 16 at some point this month, went up to almost 1660. But now you can see it's kind of settled down into this range right around where we want it to be, around 16. So there's no point, there's not too much left in the butterfly as far as value to get out of it. So we want to take what we can get because we're right on the dance floor here of making money or not making money with this spread. So we want to take what we can get out of it as far as value and move on to the next trade. So good little butterfly. Like I said, we don't do too many of these single, kind of even butterflies. So it was a good example of that. USO was pretty much a scratch. We made or lost about $5 on this trade, so not too bad. But basically, we did a calendar in USO. We anticipated that oil would kind of rally back towards the end of September, and really just didn't get to see that happen. So we sold back our October, September 36 call calendar. Remember, these calendars are completely focused on one strike, but on different contract months. And we paid or got a 30-cent credit for that, and so basically took in about a $5 loss on that trade, getting it back. So as far as USO is concerned, and let me go here to the chart so you guys can see that, really thought it would kind of settle at around 36. And unlike EWI, it rallied closer to 36 towards the middle part of the month, but it's just had a real tough time towards this last half of the month. So this calendar really hasn't shown any kind of maturing in value that we were really expecting to see. And at this point, I'm not like crazy bullish in USO to really roll it to the next month, although a lot of guys have already done that. I've gotten emails from people who have rolled the calendar to the next month and continued that process. I just don't really, I'm not crazy about the trade, so it's not something I really want to get into. I think there's going to be better opportunities and more stuff I'm going to put my money towards elsewhere. All right, so the other one that we closed out today is Yelp. Yelp was a really good trade, very fairly quick profit. We've only been in this trade for about 2.5 weeks, and we had originally bought a debit put spread in Yelp. We bought the 85, 82.5 put spread, anticipating Yelp would go down at some point. It's had pretty hellacious move down yesterday, and then today continued to move down a little bit during the day. So we were able to then sell back that put spread that we originally bought for a nice little credit of around $20 or $2. So that gave us a $60 profit on this one. Very small trade. It was just a one lot on Yelp. But again, with these debit spreads, that's what they're here for, right? They're a means to stay active in the market while the market's, trying to find some more high volatility opportunity, which is really starting to come to fruition. So this trade we had Yelp moved down exactly like we expected. It made almost the exact move that we wanted and kind of extended as far as we think it might go. So at this point, it's prudent just to close out this trade. We've made a good chunk of change on this trade. It's not worth holding it all the way through September and all the way through October expiration. Notice how far we go to the right on this chart. This is how long in timeline we'd have to hold this trade to really get like another $50 out of it. So there's not really a lot of, the risk reward is not any more tilted in our favor by holding this trade to October. So even though there is still money left and it's definitely moved down below the strikes and all that, it can easily turn around. I mean, look what happened, just the other month where, it moved down towards expiration, and then throughout the next month in July, it turned completely around and made a U-turn. I mean, there's no telling that this can't do the exact same thing as just make a complete U-turn and come back up and become a losing trade by the time that we get to October expiration. So as a prudent trader, as a smart trader, as we're trying to teach you guys here, you've got to take these opportunities and get out of the trade and kind of bank that profit. All right, so the other trade that we made was getting out of XLU. XLU was one of those ones I just really, really wanted to work so bad because we were kind of on the edge so long during the month. We were in the money and then we were out, we were just out of the money, which was great, but then we were back in the money. And this is one of those ones that just today started to move against us, saw an opportunity to close out of the call side of this original iron condor that we had that we started to leg out of. So you can follow those video tutorials. We started to leg out of it, and decided it's probably prudent just to buy back this call spread. It's so close to being in the money or out of the money at this point that it's almost not worth rolling the dice for the last 2 days here. Okay, and that's really where we're at with XLU in this trade. And I'll show you the chart here in a second, but we're so close to either making like 120, 130 bucks or losing like $500, $600. And I'm not the kind of person that wants to roll the dice and do that, and I doubt you are either. And so what we did is saw an opportunity today that basically closed as a scratch. After all of the adjustments, we lost $3 on each of the contracts. So contract-wise, not a huge loss. It was a fairly big trade, fairly aggressive investment in XLU, and just really didn't pay off because it moved up towards our strikes, pretty much the entire month. So you can see now that it's definitely still got great implied volatility. So we were trying to enter new trades at new strikes and kind of reset the probabilities going into October, and that's something we'll definitely look at doing tomorrow as well. But you can see that when we enter this trade, I mean, the stock just moved completely straight up. And with our first strike right here at 43, you'll notice that it actually spent a pretty decent amount of time in the money. And so this is where, and it was funny, as somebody who's obviously running the site, the membership site, I mean, people are just freaking out about what's going on. But notice that market cyclicality at some point is going to come back into nature, into these markets. And the stock just turned around and kind of came back into a more normalized range that probabilities had anticipated it was going to do, right? I mean, we made a high probability trade, and now we're kind of around that cusp of either making or breaking it. And we don't know where the next 2 days are going to go, but it's so close. I mean, we're 7 cents away from losing a lot of money or making money. It's just not the type of trade that I want to be in. But it really kind of proves the point of being able to, trade small enough that you can actually hold a position through something like this where it goes in the money, had a huge paper loss on this, and it's kind of whittled down to, again, a very small scratch trade. So I think it was pretty interesting as far as just the case study, although we would have liked to make just a boatload of money on that because we did it very, very aggressive as far as 8 contracts, and you can see that. We just didn't have an opportunity to make it this time. So we'll reset the strikes, kind of, regroup, spread the strikes out a little bit heading into October if we can get filled, and go after it again. All right, so the other adjustment that we made today was in UAL. So this is another one that's a very wide iron condor, and I'm going to go through this one in the trade tab as well. But very wide iron condor, and what we decided to do in this case was, because we were, again, on that dance floor, is that I kind of like the odds in UAL. It's a smaller trade, so I feel okay, kind of rolling the dice here a little bit with this one versus XLU. That was a much bigger trade. So we've only got 2 verticals in this, or 2 original iron condors. What we added is another 2 vertical put spreads below the market. So what we did is, as UAL has rallied higher towards 49 and kind of over 49, which is really creating kind of the pain point for our iron condor, is we added a completely additional position, kind of creating like a broken wing butterfly on the top side of our strategy. So you'll see it here in a second when we go over the video and the chart. but kind of creating this broken wing strategy over the top side of our market, really kind of going after this additional credit here of 33 cents. That's what really helped allow us that if UAL does kind of roll the dice higher and closes in the money for one of those strikes, that we basically had a chance to really cut our loss down dramatically. And that's what we want to do, right? So, cut our loss down dramatically. And in this case, I'm okay making that trade, right? I mean, we're traders, we're gonna, make bets, and this is one of those bets I'm gonna roll the dice on here a little bit towards expiration and kind of see where it goes the next 2 days. But logistically, what we did was sell the 49.48. But let's go over it here so you guys can see what I'm talking about. So let me go to the chart here of, UAL instead of XLU. So here is our original very wide iron condor in UAL. And you can see we did the 40.39, which is all the way down here. I mean, not even on the map. It's just completely worthless. Going to let it expire. But up here towards the top side, we had the 49.50. Now you'll notice that the stock traded today right at 49.54. So I mean, talk about just like a pincher right on the edge. I mean, it could go one way or could go the other. But you'll also notice that our break even is practically the exact same. So what we wanted to do, and what I've taught in some of the webinars and group paid webinars that we've done about moving out that break-even price, trying to recenter the strategy over the market, is create some sort of credit that will help move out that break-even point, even just a little bit, towards 50 to give ourselves a little bit of room while also moving up our max loss on this side so that if it does kind of fall off the bed and go to the right, move higher, that we don't lose as much money as we're going to lose right now. And so right now, if we did nothing, this is pre-adjustment. So I haven't, kind of added in the trade that we made today. This is pre-adjustment. If we did nothing today and UAL continued to move higher towards 50, we'd actually lose about $156 on this trade. Now let me throw in here the adjustment that we made where we sold the 49.48. So now you can see we've got kind of this broken wing butterfly happening here where we sold the 49.48. So we've basically got 2 short strikes at 49. That's ideally where if the stock actually moved down in the next couple of days towards 49, we'd make about $200 on this trade. But notice now that our break-even price, because we sold this for a credit, is now just a little bit further. So give us a little bit of breathing room. It's not going to give us a lot. Give us a little bit of breathing room on the top side for UAL to go higher and still make some money. But more importantly, then move down our max loss from 156 down to about $90. So now with UAL, if it does go higher, rather than lose 156, we're only going to lose $90. And theoretically, we've got a little bit more of an edge because of our break-evens being a little bit higher. So this is a really, really cool, really interesting trade. If it does move higher tomorrow, we might, roll up the 49 strike and continue to do that. Just do a lot of cool things to this trade to, kind of salvage some profit and protect our loss. And that's the name of the game. It's getting creative with these strategies, adding in some of these simulated trades, see what works, see what doesn't work, and hopefully this is a really, really good example of doing that with an iron condor close to expiration. Okay, so the other thing I want to talk about, the main trade that's going to give us a lot of headache now, and it's already giving me headache after hours, is U.S. Steel. So we're very, very heavily invested in U.S. Steel as far as a huge wide strangle. And after hours tonight, kind of unannounced, it was nothing that was expected, but hey, this is what trading is all about, right? After hours, they said that they're actually going to file bankruptcy for one of their units in Canada. Now, you probably think, wait a second, bankruptcy, that's a really bad thing. But actually, in the world of investing, sometimes when you file bankruptcy and remove that bad portion of your business out of your profit and loss, you're actually going to show a bigger profit because you don't have that losing entity that's now part of your company. So this really crazy way, but this bankruptcy actually is helping U.S. Steel stock price after hours. Now, let's see if that really translates into a huge move after the market opens tomorrow. But in all likelihood, we're going to see U.S. Steel closing or opening up and trading most of the day higher than where it is currently. So our strategy for the next 2 days going forward is going to be to roll that entire strategy to next month, right? Let's start there. Roll that strategy to next month, taking a bigger credit, widen out the strikes if we can do that, and that gives us a better opportunity to then manage the trade with more time. So as we get closer to expiration now, with only about 2 days to go, we really don't have time on our side to kind of let this thing settle into a place that we wanted to. So we have to roll this trade out and give ourselves a longer timeline, more timeline out to October to see some market cyclicality come back into place, okay, which I think we're going to do and continue to manage this trade. So I know I was going to get a lot of questions about this anyway, so that's why I want to talk about kind of our strategy going forward. And of course, we will send out trading alerts to everybody with exactly what we're doing with US Steel. But as always, just make sure that you have your position sizes and everything accordingly. But this is definitely one we're going to continue to manage, and we're going to whittle this thing down and see if we can turn a profit or at least manage the loss down much lower than what it'll be on paper right now. So as always, I hope you guys really enjoy these videos. Thanks so much for watching. If you guys have any comments or questions about these trades or any of the trades that we've made, make sure you ask them right below here. I'll get back to all of those tonight or tomorrow before the open, and happy trading.